Hello students, I welcome you all to this video on the problems relating to accounts and business studies. In this video lecture, we'll be looking at 10 questions on accounts and 5 questions on business studies. One thing you have to understand, as this is a model question paper solution video, we'll be picking out those questions which will be a representative of the questions that we'll be facing in the exam. So we will solve a few questions here so that you get a understanding of what is coming your way on 6th of June. So let us look at the first question. The expenditure of 2,000 incurred on a trial run of the newly purchased machine is. So they have clearly mentioned that the expenditure is with regards to the machine which has been newly purchased. Asset. One thing we have clearly understood is that the expenditure is with regards to the asset, and the benefit of the asset and also the benefit of the expenditure for that matter will be useful for the user, for the person, not only for that current year, but also for the years to come. That is why it cannot be taken as preliminary expenses, cannot be taken as revenue expenditure, neither can it be taken as deferred revenue expenditure. So the answer straight away for this question is capital expenditure. The expenditure of 2,000 incurred on a trial run of the newly purchased machine is capital expenditure. Let us look at the next question now. A has discounted 3 months bill at 10% per annum from the bank and given the credit of rupees 11,700. On the due date, the bill was dishonored and noting charges of rupees 50 were paid by the bank. The amount by which A's account will be debited by the bank is. So here they have been given, we are given with data, that is the bill is a 3-month bill. It is discounted at 10% per annum, and after discounting the amount is 11,500. Obviously on the due date the bill gets dishonored and bank pays a extra charge which we call as noting charge of rupees 50. Now taking all this data into account, we have to arrive at what was the actual value of the bill along with, and when we add the noting charges, what will be the total amount. When you look at it here, most of you will get an idea. You can take away the answer directly. For those uninitiated students, this is what you have to do. We don't know the value of the bill, so let us take it as X. Then obviously it is discounted at 10%, right? So we'll take it as 10 by 100. Next, it's a 3-month bill. This is where most of you will miss it. 3 by 12 is extremely important here. And what will be this equal to? AX. That is the value of the bill minus whatever he has already received. That is 11,700. If you do it like this, the answer will be very clear to you. Now, this will be X into 10, 10X into 3, 30X. 30X. And then 100 into 12 is 1200. The other side, it will remain as it is, X minus 11,700. Obviously, we can easily cancel out here. 31s are, 34s are 120. So 30, 40s are 1,200. Now, X is equal to 40. The number which was in the denominator goes to the other side. So 40 into X minus 11,700. Now it is 40X minus 4,68,000. So you may be wondering, how did I get 4,68,000? Obviously, you'll have the calculator there to do it by yourself. Or what you can do, 117 into 4 you'll get 468 and then add those 3 zeros back. So x is equal to 40x minus 4,68,000. Now 39x is equal to 4,68,000 and then x is equal to 4,68,000 divided by 39. So when you cancel out this, easily you'll get rupees 12,000 as the answer. Please remember, x is the value of the bill. So 12,000 is the value of the bill. You have to add noting charges also. So it will be 12,050. So the answer for this question is 12,050. Let us move on to the next question now. A and B are sharing profits in the ratio of 2:1. C is admitted as a partner for 1/4 of the share of profits. 3/4 of his share comes from A and 1/4 of his share from B. The new profit sharing ratio is. So here they have not given the sacrifice ratio of A and B directly. What they have said, a new partner comes in, he gets 1/4 of the future profits, whatever is the future profits, he gets 1/4 share in that. How does he get that? 3/4 of whatever he gets is from A and 1/4 of whatever he gets is from B. So what we have to do, we have to find out sacrifice ratio of A. How will you find out sacrifice ratio of A? Very simple, my dear students. So what does C get? 1/4. This is of A into 3/4, right? So the sacrifice ratio of A is 3/16. So 3/16 of whatever C gets, he gets it from A, and sacrifice ratio of B is 1/4 into 1/4. So this will be 1/16. Now we know the sacrifice ratio of A, which is 3/16, and sacrifice ratio of B, which is 1/16. Now we have to just find out new ratio. So new ratio of A will be old ratio minus sacrifice ratio, right? So old ratio is 2/3 minus sacrifice ratio is 3/16. Both the numbers are different here. So if you multiply them, you'll get the LCM 48. So 48 will be the common number there. 3 16s are, so 2 16s are 32. 16 3s are 48, right? So 3 3s are 9. So 32 minus 9, 23/48. Now, you can stop here. You'll get the answer. You need not go any further. You have to wait. You have to not waste time, right? You have to save time. See, in the option, there is only one option where A gets 23 proportion of the share, right? So you need not go further. 23:13:12 will be the right answer. If you want, you can cross-check now, but in the exam, don't waste time on things like this when you have got a clear answer in front of your eyes. Let's go to the next question now. The amount of depreciation charged under the annuity method. Obviously, all of you will know this answer directly. That is, it will remain fixed for all years. You'll take the number of years and you'll take the rate that is to be charged. So you'll get under annuity method a fixed amount. That will the decimal you'll have to multiply with the value of the asset, and it will remain, the depreciation will remain fixed for all the years. So I hope the answer is very clear for this question. Let's go to the next question now. On 1st August 2012, Anand drew a bill for 30 days after sight. The date of acceptance is 8th August 2012. the maturity date of the bill would be. Now, please understand, though the bill was drawn on 1st August, it was accepted on 8th August. So the date of acceptance is of utmost importance to us. Why? Because they have clearly mentioned 30 days after sight. So if you take the date of acceptance or date of sight, that is 08.08.2012. This is your starting date. So in the month of August, how many days? 31 days, right? So from this, first take out 8 because on 8th, the bill was accepted, right? Add back one more because the exact date of 8 should be added. When you take out 8, 23 days will remain, right? But what will happen is if you deduct 8, the date 8 will also miss. We have to take that into account. That is why we are adding 1 back. So 31 minus 8, 23 plus 1, 24 days in the month of August. Next, which is the next month? September. So in the month of September, to fulfill 30 days, how many days are remaining? 6 days. So 6th of September should be the answer in most of the cases. But what are we missing here? Please remember, always there is a grace period, right? Grace period is of 3 days. So if we add 3 more days to 6th of September, obviously 9th day, correct? So 9th day of September is 9th September. So the answer will be 9th September in this case. Let's go to the next one now. Rohit, carrying on real estate business, sold a piece of land for rupees 4 crores, cost rupees 3 crore 50 lakh rupees. Then the type of receipt is the nature of that receipt and the profit on sale is. So we have to tick the correct answer here with regards to 2 important points. One asks you what is the type of receipt and if and when there is a profit. Obviously, cost is 3 crore 50 lakhs, whereas the sale is of 4 crore. So there is a profit of 50 lakh rupees. So where should that 50 lakh go? So please understand, because he is running the business, because he is a real estate businessman. So whenever he sells a piece of land, it will not be taken as capital receipt, rather it will be a revenue receipt. There is only one option where the receipt is in revenue form. So directly tick that answer. If you want, you can cross-check. Is the profit transferred to profit and loss account? Obviously, yes. That is what you have to do when you are in a business and you are selling something, you are earning profit. Those profits, you take it under profit and loss account. Next question is an interesting one. Here, a trader followed the written down value method of depreciation. The book value of asset after 4 years. The book value of assets after 4 years is 24.01% of the original cost. Find the rate of depreciation. So here you have to find out the rate of depreciation. So depreciation rate is equal to, see here, do we know what is the cost of that asset? We are not aware of it, right? So we are not aware of the cost of asset. So what we will do, we will take it as 1. Okay. And then from this, depreciation is always deducted from the total value of asset. Depreciation is deducted. So minus 4th root. How did I get 4th root? They have clearly mentioned after 4 years. So 4th root of, I don't have a space, so I'll write down 0.2401. And when you check it in the calculator, 2401. What is 4th root all about? You have to take a particular number, you have to multiply it 4 times, and then you have to get this answer. Check in your calculator. If you multiply 1 4 times, you'll get 4 itself. If you multiply 2 4 times, you'll get 16. If you multiply 3 4 times, you'll get 81. When you do so and so, obviously, you have to cross-check here, where should I stop? And you'll stop at 0.7. That is If you multiply 7 4 times, the answer will be 2401. But here the number is in decimal. That is why you will take it as 0.1, 0.7. So 1 minus 0.7, depreciation rate will be 0.3. What is 0.3? See here. If 24.01% is written as 0.2401, obviously 0.30 is nothing but 30%. Correct? The answer is 30% here. Let's go to the next question. Very simple questions on your screen, right? So loss on sale of machinery is credited to which account? Is it credited to machinery account, purchase account, profit and loss account, or none of these? Obviously, you all know the answer. It is credited to machinery account. The next question, at the time of admission, the unrecorded investments, rupees 30,000, should be treated. The adjustment entry will be. So what has happened? There is an investment which went unrecorded earlier. Now you have to record it. So if the value of investments have to increase, what you have to do? Because investment is an asset, you have to give a debit to it, right? And revaluation account is always a credit side, right? It's a liability item. So it will be credited. That is why the correct answer for this is unrecorded investments account debtor 30,000 to revaluation account 30,000. I hope you have understood this question. Let's go to the next one. The last question among various questions in accounts. The gross profit of concern is rupees 1 lakh and the gross profit ratio is 25%. The sales return amounted to rupees 17,500. What is the gross sales? Just by looking here itself, if you can do it exceedingly well, you can do it without using any formula, without doing anything. But still, let me teach you the right method to do this. So we have to take the gross profit ratio formula here. Gross profit ratio is equal to gross profit divided by net sales, correct? So in this 3 data, we know what is gross profit ratio, 25%, so 0.25. We also know the gross profit amount, which is 1 lakh rupees. Are we aware of net sales? No, we don't know what is net sales here. So let net sales be as it is. Now, net sales is equal to rupees 1 lakh divided by 0.25. So 0.25 ones are 0.25, 4s are 1, correct? How many zeros are remaining? 5 zeros. So 4 lakh rupees is the net sales. Should we find out net sales or gross sales? Obviously, we have to find out gross sales. So add the sales returns back. What is the sales return amount? 17,500. So when we add 17,500 to 4 lakhs, the answer will be 4 lakh 17,500. Very simple question, straightforward answer. Now let us go to the next section, which is business studies. Which are the rules regarding internal management of a company? Very simple question, straightforward answer. Articles of association. Social responsibility is broader than legal responsibility, narrower than legal responsibility, same as a legal responsibility, none of the above. Can it be less than legal responsibility? Obviously no. Is it same as legal responsibility? The answer is once again a no. It is always broader than legal responsibility because you are not legally bound to do certain things, right? Social responsibility is more important. That is, it is broader than legal responsibility. The first 5-year plan of India was based on the model of Herod-Domer model. The next question, the process of converting the message into communication symbols is known as media, encoding, recording, feedback. Obviously, all of you will know the answer, that is encoding. Okay. The maximum number of members in a private limited company, 50, 200, 150, unlimited. Unlimited is for public company. They have asked us private company. So it is 200 members. So by this, we come to an end with regards to this particular section. Thank you so much, students, for listening to me. I hope you learned a lot in this video. Let us meet again in the next video. Thank you so much.